Today I want to talk about how the shorts are trapped with no escape, and how many other hedge funds out there know this is fact and have been loading up on AMC all the way to $70 per share and continue to hold because they know the squeeze is coming. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So Frank Cassetti tweeted saying hedge funds are trapped. If they cover their shorts, hedge funds go bankrupt. If they get margin called, bankrupt as well. If AMC is acquired, the hedge funds go bankrupt, and if AMC issues a dividend, then bankruptcy as well. Their only hope is for you to sell. Now, something I find very interesting is all of these hedge funds that were loading up on AMC to $70 per share and have massive cost averages but continue to hold their shares. So let's start by ignoring a number of funds like Vanguard, Susquehanna and State Street because we know these hedge funds aren't necessarily good funds. They're likely aiding Citadel and helping to short AMC down. But for example, if we look at the Northern Trust Corporation, they hold 3 million shares at an average per share of $20. Goldman Sachs holds 3 million shares as well at an average of 28. Millennium holds shares as well at an average of 20, but Legal in General hold 2.8 million shares with an average of $40 per share. Now on top of that, we've also got the Swiss National Bank holding 2.2 million shares at an average of $32 per share. As well, we've also got UBS Global Asset Management, 1.5 million shares at $34. We've also got Sumitomo, 1.3 million shares at $42.48 per share at an average price paid. Many of these hedge funds are holding millions of AMC shares at an average price paid of $30, $40, and many funds even holding AMC shares at an average price paid even higher than $40. Taking Sumitomo as a prime example, these 1.3 million shares at $42 per share cost them a whopping $55 million. Their AMC holdings are now only worth $7.5 million. Sumitomo is currently down around $47.5 million on their AMC shares, but yet they haven't sold a single share and they continue to hold. So why is that? Well, many of these institutions like Sumitomo that purchased AMC at $42 per share, $34 and even higher know that AMC is going to squeeze, so they continue to hold. They know there's no point selling AMC when they're down 80% or even more on their holdings because they know the squeeze is guaranteed. It's just a case of waiting. Something else I found very interesting is the number of funds that actually haven't yet received a single APE share. As Samuel tweeted, he said, "What am I missing? Shouldn't all of the long funds on AMC also be reporting their APE holdings as well? Did they not receive any APE shares, or did they sell all of those APEs?" Many of these hedge funds have been reporting AMC holdings every single day on the 4th of November, the 3rd, the 2nd, the 1st, and previously, reporting hundreds of thousands of shares held, even millions. There's hundreds and hundreds of institutions and funds currently holding AMC shares, but yet with APE, there's only around 10 or 20 funds supposedly in the entire market. There's only around 1 million or potentially 2 million APE shares that are currently being held by institutions. Why is this? Why isn't there hundreds of millions of APE shares also being held by institutions and not just this 1 or 2 million shares? It's likely these institutions actually haven't yet received any APE shares because they know there wasn't enough APE to go around for all of the investors. Many of these funds actually said they'd be buying more APE shares because they believe that APE and AMC should be the exact same price. Therefore, if APE is lower, they should be buying APE and ready to arbitrage. Therefore, if anything, we'd expect a larger institutional holding of the APE float compared to AMC as there's a greater arbitrage opportunity. But yet, 98 or 99% of the APE float is held by retail investors, and only 1 or 2% of the APE float is being held by these institutions. I think it's likely these institutions simply haven't received any APE shares because there wasn't enough to go around, and they're waiting for Citibank to buy up these new 425 million shares from Adam Aron to receive their allocation. It may be that when these additional 425 million APE shares are distributed, many of these hedge funds and institutions will end up buying up all of these 425 million and trying to get their hands on even more shares because they recognise there's such a great opportunity with the APE stock. It will also be very interesting to see how many over-allotted shares Citibank is going to need for all of these institutions and all of these hedge funds. And guys, be sure to also join the free Discord linked in the description below. We've got 1348 indicators and we talk about AMC all day long, sharing due diligence. And also be sure to sign up to Moomoo, as you can currently get $10 absolutely free and 15 free shares on top of that, worth up to $2,000 each, a grand total of up to $30,000. And that's why Unusual Ape tweeted saying, "We know one thing. The shorts have not closed." He said no matter what people say, it is impossible. They're currently relying on the CNS program and the dark pool heavily for the manipulation. And he said, if anything, I want AMC to drop further to $2 or even $3 per share because the price simply doesn't matter. If anything, he's loading the boat because he believes the rip will be enormous. He said the majority of the market and crypto is down 70%, if not more. Many of these major blue chip tech stocks are also down 40, 50, 60% and even more. He knows with the majority of the market down 70%, these liquidations will be incoming. And as Hang Loose tweeted, he said, get this, Credit Suisse has net profited $20 billion over the last 13 years. That's $20 billion of pure profit after all of the company expenses have been paid out. But last week, Credit Suisse announced they are begging almost every major bank around the world for help in raising $4 billion. And that means that Credit Suisse has already spent or lost those $20 billion in reserves and whatever they've made in the past previously on bad bets or positions they're currently stuck in, and now needs another $4 billion to stay afloat. And interestingly, he said that's the exact same thing we saw when Melvin Capital got bailed out for $2 billion last year by Citadel and by Point72, and then passed on their bags to a bigger player before closing down shop. He asks, one has to wonder which bags or what bags Credit Suisse is holding. We know they're likely still holding AMC and GameStop short positions through swaps. Obviously these bags and these bad bets that Credit Suisse is still holding is causing it to bleed out more than $20 billion in just roughly a year. And he said we're also seeing all of the other warning signs too, as Credit Suisse's credit default swaps have spiked to all-time highs, as well as having their rating lowered to one spot above junk. He said it's pretty clear they're unable to close their losing positions, otherwise they would have cut their losses long before losing this entire $20 billion fortune. And he said whatever this giant bad bet that Credit Suisse is holding really is, it's getting worse and it won't go away. And something that also proves these hedge funds are absolutely desperate and these hedge funds are failing is some very interesting comments made from the regulatory authorities. Around the world, many of these hedge funds are begging regulatory authorities to remove capital requirements. Obviously, capital requirements and collateral requirements were put in place back in 2009 to prevent another 2008 financial crisis. These collateral requirements have worked perfectly fine for the last 15 years, but now these hedge funds are close to being liquidated, they're begging for collateral requirements to be relaxed, if not removed entirely. This article says that regulators are warning against weakening the minimum safety net. It says the European Union and potentially the US and the UK as well could fall foul of international banking standards designed to prevent a repeat of the global financial crisis if proposed changes to dilute the capital rules are passed. These hedge funds are obviously begging for the removal of this minimum safety net or begging for the removal of these collateral requirements, but these regulators aren't giving in and in fact are warning against it. They know these minimum safety nets and these collateral requirements have been put in place to stop these hedge funds getting too over-leveraged and to stop them blowing up catastrophically, losing everybody's money. But these hedge funds are trying to turn around and say, guys, we are so close to being liquidated, please remove the capital requirements, we're going to try our best to not get liquidated and not cause another recession. But obviously these regulators aren't having any of it because they know these regulations were put in place to prevent another financial crisis and therefore they don't want to remove the regs. This goes to show that it's not just Credit Suisse bleeding, it's pretty much all short hedge funds out there, and that's why so many institutions continue to hold AMC shares, even with an average cost per share of $42. These institutions continue to hold because they know the squeeze is guaranteed. They don't care they paid $42 per share on 1.3 million shares of AMC because they know the shares are worth much more. And as Jeff Weininger tweeted, he said the biggest headline today is not the Fed's crazy decisions. Nope, it's actually the 90% decline bombshell from Wells Fargo. Wells Fargo had around 18,000 loans in its retail origination pipeline in the early weeks of the fourth quarter of last year. However, that figure is down as much as 90% from a year earlier. And as a result, Wells Fargo's mortgage staff are bracing for layoffs as the US loan volume collapses. Clearly, we're on the brink of not just a stock market crash and not just a potential recession, but also a property real estate market crash as well. But guys, be sure to let me know what you think down in the comments below. And as always, guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.